Ladies and gentlemen, traders and investors, a very warm welcome to our channel Polar Vega. We've seen the markets recover all of their losses and print a new high this week, while markets in Europe and Asia have been behaving divergently, and Nikkei 225 has been the only one to have revisited its all-time high amongst the popular European and Asian bourses. In short, the worldwide market seems to be lacking in conviction and trying to grapple with the volatility in the energy markets. The cause of divergence is a divergent assimilation of war-related information and the divergent effect of the closure of the Strait of Hormuz on different economies. Over and above the disruption of supply of oil and gas, the obstruction of the Strait of Hormuz and this particular shipping route has started affecting the supply of other goods and commodities like fertilizers, aluminum, and many other raw materials and semi-finished and finished goods. Gold and silver seem to be in the process of reversing from their recent highs printed on Friday, the 17th of April 2026. Oil seems to have found a sweet spot around 80 and has bounced off the area for a third time, taking away some of the accumulated buy orders. The events of the week have managed to propel the volatility index a bit higher, with VIX closing at 18.71 on Friday, the 24th of April 2026. With the markets coming back up, it's time to trade the asset classes with high beta so as to make the best of the current market conditions. The risk-on mood has been maintained for the fourth consecutive week. The profit makers are those whose portfolios have a bias of stocks with high beta or beta greater than 1. Beta is a measure of an asset's volatility relative to a benchmark such as the market index. A beta of 1 indicates the asset moving in tandem with the market. A beta greater than 1 shows the magnitude of change to be higher than that of the market, and a beta less than 1 shows a magnitude lesser than 1 or lesser than that of the market for any given change in the market index. Thus, assets with high beta seems to do better when the market is gathering strength and trying to establish its uptrend. Beta measures both magnitude and direction. Although beta is a statistical coefficient derived by using linear regression, it tends to change over time as the covariance or joint variability between the two variables changes. We can see an example of this when we visit the US oil spot or the XAU/USD, the gold-based ETF charts. Correlation is something which is obtained by dividing the covariance between two variables with the product of the standard deviation between the variables. Standard deviation is nothing but the square root of variance between the two variables. Correlation is basically a ratio and it varies between -1 and +1 and is not an absolute relationship between the two variables. It just shows the direction of movement of one variable with respect to the other, but it doesn't show the change in magnitude. We use correlation between two assets to see how strongly do their prices move in tandem or in opposite directions. With gold having lost the safe haven status and finding its own trajectory with a change in energy prices, we shall need to wait and see if the metal can retrieve its lost luster or continues to meander for the rest of the year as the dollar continues with its sideways journey, depending upon the decisions made by the central banks of different countries and also depending upon the kind of news that comes out or the data that comes out from the data agencies. With the world markets moving divergently, we shall touch upon the US dollar index, followed by the S&P 500, Nasdaq 100, DAX 30, FTSE 100, Nikkei 225, Hang Seng 33, and US oil spot, as well as XAU/USD, which is the gold-based ETF. Disclaimer/disclosure. The contents of the presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 39th of a series of interactive videos aimed at educating our viewers, and we'd like to warn all our viewers of the risk associated with the business of trading and investment. Securities investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on the analysis of the market, and we do not advise, recommend, or guide anyone to take any trade based on the contents of the video. And we do not take any responsibility for the partial or total losses arising out of trades based on the contents of this video.
Traders and investors, the chart that we see in front of us is that of the US dollar index. Today we're not doing the Dixie or the American US dollar index, but instead we're doing the European US dollar index, which has got a percentage of the euro and the GBP as well. Although the numbers could be different, but the chart looks exactly the same as the Dixie, with the index going sideways from April 2025 up until now. Last week we saw the reversal in the chart with a lot of red candles being printed during the previous week, but with the events of the current week we can see that it has managed to print some blue candles and is trying to reverse its way up and continue its way with the sideways movement. There are good controlling candles, as we can see. The first one, which is on the supply side, is the one lying between 12898 and 12869, and the lower controlling candle lies between 12456 and 12504. The range is bound between 12887 and 12530. That's the range that has been maintained since April 2025, and it continues to do so as the geopolitical situation evolves and as the expectation of the dollar strength changes according to market conditions. Traders and investors, the chart that we see in front of us is that of SPX 500. It is the daily chart that we're looking at. It is the ETF based on the S&P 500, and we're looking at the spot market of S&P 500. This particular index was the only index up until last week which had printed a higher high, and this week it has been going sideways but has managed to go slightly above its all-time high that was printed last week, and as we speak we are at 7169.03, which is the new high. The index has been in an uptrend for the last 4 weeks. It has printed 3 higher lows, but it managed to break the all-time high, or the ultimate supply that it had to break was on Friday of the week before last, and then on it has printed alternate blue as well as red candles going sideways. It may be trying to gather some more buy orders to push it through the new all-time high and continue with its uptrend. But if things were to change geopolitically, we could see a temporary reversal into the lower demand zone around 6750. Therefore, as of now, we still have to wait if we want to go long on this particular index, as we need to get a strong drop into this demand zone so that we can join the already established uptrend. The new demand zone shall be lying between 6892 and 6750, with the stop loss going below 6750. Traders and investors, the chart that we see in front of us is that of NAS 100 or the Nasdaq based ETF, and here is the daily chart that we're looking at. Nasdaq has been the only index in this particular week which has been making higher lows and higher highs and has been the strongest of all the indexes worldwide. As we talked in our introduction, that if we've got assets with beta higher than 1, then the strength of the portfolio automatically is very high when the market is moving in a positive direction, and if it's moving in a negative direction, then the weakness as well is very high. Therefore, Nasdaq has managed to print some ballistic blue candles and established a new all-time high at 27324.3. If we wish to become a part of the ongoing uptrend, then there's a nice sweet spot between 26695 and 26388, and the stop loss shall go below 26112, which is the base of the controlling candle for this particular uptrend at this stage. It managed to break out of the all-time high during the week before last, which was at 26289, and ever since then it has managed to print a rally based rally followed by another rally based rally. So therefore, as of now, this particular index is in an uptrend, and the long is the only trade that we shall take when it reverses into our demand zone between 26695 and 26388. Traders and investors, the chart that we see in front of us is the of UK 100, which is the ETF based on FTSE 100. We're looking at the daily chart where we can see that it has not been able to break its previous all-time high and has made a double shoulder and is trying to reverse from its new high printed at about 10711. The all-time high lies at 10866.8, but the index doesn't have the strength to reach or break out of this all-time high unless if there is a stimulus injected through the energy market or through the fall of the dollar as well as the GBP in the near future. But otherwise, since the local economy is seeing a lot of inflation, there are very rare chances of the GBP showing any strength or any weakness in the near future, with the central bank or the Bank of England going to stay put for the next 3 to 4 months without making any changes to the interest rates. And therefore, what we can see is that this particular index could go sideways after printing this rally based drop and then a basing area in the last week, which could be followed by another drop candle to close below 10250 and starting the new downtrend towards its supporting area, which is lying between 10,000 and 9687, and the supply area is currently being controlled by the candle lying between 10794 and 10939. So these are the controlling candles on the supply and the demand side, and the index, as we can see, has not been able to show any strength last week and is trying to reverse its direction towards its demand zone below 10,000. Traders and investors, the chart that we see in front of us is GER30 or the DAX 30, which is the German index, and it is the ETF that we're looking at. This is the daily chart. As compared to the FTSE 100, the German DAX 30 has been showing a lot of strength, as we can see from the blue candles, which are quite ballistic and very explosive candles, and have been kissing the 2 sigma line, or the double standard deviation line, almost at every explosive candle that it has formed, and it is trading far away from its mean, as we can see on this chart, but it's still very far out from reaching its all-time high. And also there is a very strong supply area which is controlled by the candle between 25417 and 25209, and as of now the supporting candle or the demand area lies between 24022 and 23521. This is the demand zone that it's currently trying to take out with the red candles that were formed during this trading week. But on Friday it has managed to print a blue candle and it's still basing above this demand zone, and if it were to break down, then it is going to counter a lot of buy orders contained in this zone. Otherwise we could see another explosive blue candle come in to touch its 2 sigma line, and then facing the sellers in the area between 25417 and 25197. Therefore the DAX 30 is quite strong as compared to the FTSE 100, and we shall wait and watch if we can reach its all-time high and manage to clear the all-time high line. But we can see that there is no chance of any stimulus injected through the euro or the ECB, as the euro as of this time is quite strong and shall be expected to be strong with no rate cuts during the next couple of months. Traders and investors, the chart that we see in front of us is that of HKG 33, which is the Hang Seng Index from Hong Kong, and is the daily chart that we're looking at. As compared to what we've seen so far, it's almost in line or maybe even weaker than the FTSE, as we can see that there are quite a few supply areas which are on top of the current price position. The last high that it has touched was at 26617, which was touched on the Friday of a week before last, and ever since then it has formed a rally based drop and then a drop based drop, and is currently basing above 25,500, and there is a nice strong supporting candle between 24871 and 25300. So that's the demand area that it has to clear if it decides to come back down. But otherwise, if it tends to go up, then there is a supply area between 26762 and 27162. That's the supply that has to clear before encountering the supply bearish candle at about 27396 and 27173, which is the controlling candle for the current drop that it had seen in the last couple of months. And then along with the other markets, it has reversed on the 23rd of March or on the 30th of March after coming back down into the controlling candle that was between 25016 and 24165. So that's the strongest candle. We can see the support candle. That was the one that started this current uptrend, but it has managed to form a rally based drop and a drop based drop. So if at all it has to go back up, then it needs to close above 26606 to form a new high and a higher low as well. As of now, we can see that the rally candles in the last couple of weeks have not been very strong, although the candles formed in the first 2 weeks of April were quite strong and had been kissing the 2 sigma line, but of late it has been coming back into the EMA, the 20 EMA, and has been kissing the 20 EMA from Thursday up until Friday. Traders and investors, the chart that we see in front of us is that of JPN 225 and it is the Nikkei 225 based ETF. We're looking at the daily chart and the Nikkei 225 looks to be the strongest of the European as well as the Asian indexes. It has managed to touch the all-time high on the Friday of last week and it has been trading sideways along this line throughout the week, forming alternate blue as well as red candles. We can see that the Nikkei has been following the S&P 500 almost in tandem, except that the S&P 500 has managed to break out of its old all-time high and form a new all-time high, whereas the Nikkei still has to break out. So therefore, in this strong uptrend, if at all somebody wants to join the uptrend, there is a nice demand zone underneath the current price, which is between 57657 and 55769. The controlling candle as well happens to be the same length, and if at all the geopolitical situation changes or there are any factors that allow it to drop into this area, then that's the best chance to join the uptrend and break out above the all-time high and try to take advantage of the newly established uptrend in Nikkei 225. Traders and investors, the chart that we see in front of us is that of gold based ETF and it is XAU/USD. We're looking at the daily chart. There hasn't been much of a change on the chart from last week. As we can see that this particular asset class has been basing around for the last 3 to 4 weeks, with its ATR dropping from 238 to 115 during last week. So it's more of dojis and weak candles than any prominent drops or rally candles. It's formed its new high, which was done on Friday of week before last, which is at 4888, but it hasn't been able to break beyond that and it has been coming down into a demand area around 4700 to 4550. So that's the demand area that it's currently looking at. If it breaks below that, then there is a huge buyer's zone between 4500 and 4390. Therefore, there is a lot of chance for this particular asset class to bounce back from its current position and continue going sideways between the sale orders at 4800 and 4900 and the buy orders between 4550 and below. So that's the range that we currently looking at before it decides to break out either way. Traders and investors, the chart that we see in front of us is that of US oil spot, and we're looking at the daily chart. The US oil spot has had a very explosive week after the announcement of the continuation of a ceasefire by the President of the United States of America, and it has printed a continuous line of four rally candles, blue candles, and has managed to reverse all its losses after falling to 79.09 on Friday of week before last. Therefore, one still needs to see if it can continue to go up during this week or during the forthcoming week and come into our supply zone between 101.5 and 106.58. As we can see, the oil has found a nice sweet spot around the 80 area, and it continues to bounce off this area whenever it visits this particular demand area under supply conditions. Whenever there is a negative geopolitical news, it tends to come to this area and then finds a lot of buy orders lying between 800 and below. Therefore, if we were to go long, then we still have to wait for it to come down to this area below 80, and we can get a stop loss below 72.4. Otherwise, we can wait for it to come back into our old supply area, which was formed about 3 weeks ago with this rally based drop, and the stop loss could go above 106.6 and the entry could happen anywhere above 101.3. It's a nice opportunity for sellers to take advantage of this new asset class, which is almost replaced gold and silver during the past 1 month, and all the buyers and sellers are flocking into this particular asset class to take some quick profits. Traders and investors, the chart that we see in front of us is that of the US dollar index. Today we're not doing the Dixie or the American US dollar index, but instead we're doing the European US dollar index, which has got a percentage of the euro and the GBP as well. Although the numbers could be different, but the chart looks exactly the same as the Dixie, with the index going sideways from April 2025 up until now. Last week we saw the reversal in the chart with a lot of red candles being printed during the previous week, but with the events of the current week we can see that it has managed to print some blue candles and is trying to reverse its way up and continue its way with the sideways movement. There are good controlling candles, as we can see. The first one, which is on the supply side, is the one lying between 12898 and 12869, and the lower controlling candle lies between 12456 and 12504. The range is bound between 12887 and 12530. That's the range that has been maintained since April 2025, and it continues to do so as the geopolitical situation evolves and as the expectation of the dollar strength changes according to market conditions.
We hope that our presentation has been informative and exciting enough for you to come back to our channel Polo Vega and watch all our videos every week. We shall continue with our weekly commentary and analysis, shall be touching upon events to the highlights of the week, and shall also talk about interesting asset classes each week. We did touch upon some new indexes like Nikkei 225, Hang Seng 33, DAX 30, FTSE 100 in our analysis today, and shall revisit them if you find them interesting and want us to come back and analyze them again in future. If you liked our video, please give us a thumbs up and press the bell icon underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us on our website www.polovega.com or get in touch with us to our Twitter handle @PoloVega. Please keep saving, investing, and getting wealthier until we meet next. We thank you for watching our video and please like, share, and subscribe to our channel Polo Vega.